Yo, what's up, guys? It's your boy Lyimotradez, and we're back again in lose the week. Yo, what's up, guys? It's your boy Lyimotradez, and today we are the.
Stop it. Get some help.
What's up, guys? It's your boy Lyimotradez, and today we had a really good winning trade on NASDAQ, and as you know, guys, we're performing really good on NASDAQ. We've been winning, as you can, if you are following up on our previous series on the October Funded Next account. We actually passed it, and NASDAQ is one of the trade. It's one of the pairs that managed us to make the most percentages. So let's just start on the video. Let me jump on this trade recap, and let's see why we took the trade. First, let's see our account metrics. As you can see on the 8th, so we started with the first trade of 1st of November, which was a break-even trade that we took, and price actually went to TP3, but we were targeting TP5, and price actually reversed back to break-even and stopped us with break-even. It's a break-even trade, but as you can see, this is a huge account. It's a 200k account, so break-even, like $200 is like break even, so it's like 0 point something percent. So on 4th of November, as you can see, guys, we're taking the most high probability setups. We do not trade every day. We take only 1 to 2 setups in a week, and we find those trades that align with our strategy, which is smart money concept, as an order block, fair value gap, an inverse fair value gap, or liquidity sweeps, and also 50% mark if price is actually coming to discount or premium zones. So let's see why we took this trade, which was on the 8th of November, which made us, I think, this is 6% or 5%. Yes, a 6RR. We catch the 6RR trade. It's like 6%, which managed us to pass this account, because this one was 4.5%. and this one was 6%. So when you total it up, it becomes 10%. I've not done math, so I don't even care. So let's just jump over our trade recap. So if you see anything on my charts, guys, I usually make trading fun. So sometimes these markets can play with your brain, and that's why I'm not that much in the markets, and I take high probability setups. So yeah, I just try to make it fun. So yeah, so let's see. So as you can see, let me remove this guy first. Let's go back. Okay. So as you can see this trade, let me remove this. So as you can see, we're very bullish on NASDAQ. This is our previous trade. It's the trade which we took on. It's the trade we took on 4th, I think. Yeah, it's the trade we took on 4th of November. As you can see, guys, it's the trade we took on 4th of November on an order block, and we targeted this area, and we say that as you can see, this market structure, the market structure was actually going from, it was bearish, so the market structure was changing because we took these highs. As you can see, these highs were taken, and we formed an order block right here. And I said that in the previous video, if you are actually listening, we're gonna see this one buying because of this order block. As you can see, it bought, we continue buying and buying and buying, and this is also due to the election going on how Trump win, and the market, everything was going up. As you can see, also Bitcoin was also going up. As you can see on the daily, on the past 1, 2, 3, 4 days, this was on 6th of November, which was the election. The market spiked on Bitcoin, and we actually broken the highs on the all-time highs, and now we're actually at 76,000. So let's just get back on track with NASDAQ. We don't actually care about crypto, guys. Maybe if I have money and I think about investing in crypto. So the market was actually buying on the past 3 days since we took our trade on 1st of November, and as you can see on the 15 minutes, let me keep this well. So this is the trade we took, and what I anticipated is the market to pull back on this 50% mark. As you can see, this 50% mark is where it's usually a place whereby when the market is buying, it comes back and pulls back, and traders, actually institution traders, comes put their orders. As you can see, let me just not get that deep into the strategy. So when you reach at this area, let's say at this area, people usually panic and they start buying at this area. After they start buying at this area, when they start buying at this area, it becomes overbought. So the market usually comes back and pull back at the 50% mark. This is the 50% mark. The market, I was anticipating the market to pull back on the 50% mark. So it actually almost came on the 50% mark, but we also had this fair value gap on the 4 hour. We had this fair value gap. We had this fair value gap on the 4 hour. We had this fair value gap on the 4 hour, and the market came on the fair value gap instead of coming into the 50%, which was this area, which was our 50% mark. It actually came into the fair value gap and retraced, and that's what we were anticipating for the market to sell, and also the DXY when we were selling since the opening of London session. Let me use this indicator to show the sessions. So this is London session, the blue area. As you can see, the market was buying. As the market is buying on London session, that means that all the pairs against the US dollar, like NASDAQ, Euro USD, they usually sell. So it's like an inverse correlation. You can use that as your inverse correlation to take your trades, and that's how us smart money traders, we usually take our trade. So on NASDAQ, let's go back on NASDAQ. I don't want to talk about that, guys. I have so many baby mamas, and I don't want to touch my phone. So when we reached this area, these eyes, I wanted to take sales. So it's like the price of a certain pair is getting overbought, and we're waiting for price to come back to the 50% mark. So this was were my targets at this area, at this order block right here. There was an order block right here, and I named them as rep area. So if the market actually wants to reverse on this area and go hit my stop loss, okay, don't mind about the words, I just try to make this fun, guys. So as well as these areas, okay, let me just go the 30 minutes. Okay, the 30 minutes, let's start on the 4 hour. The 4 hour started showing that we're starting to become bearish. As you can see, we had this hammer. That's institutional wise, they call it hammer, and that's how I started trading. I started with the trading Bible, and that's how they teach it. But like, it's an order block basically. We had an order block right here, which is a sweep of liquidity, and price came into the order block, but that's the 4 hour. If I actually wanted to wait for a trade, I would wait on this candle, which we actually waited on this candle, which were playing inside an order block. So what I wanted is to either look for a fair value gap in this area. So as you can see, we had this fair value gap on the 15 minutes. Let me remove this order block, as I knew that I'm an order, and how to draw an order block. An order block is the last bullish candle in a buying trend before the bears start getting inside. As you can see, this is the last bullish candle before the market started going bearish. So you mark your order block, and it has broken the high, so it's a liquidity sweep. These highs were broken. These highs were swept or broken, so we call it liquidity sweep. So when the liquidity sweeps were formed, it also formed an order fair value gap. As you can see, this huge fair value gap right here. There was this fair value gap, and that's what was on entry. We took the trade on the fair value gap, and price started going on these lows. So these are areas whereby market could reverse. As you can see, there was this area and this area, but the 4-hour was aligning with us, how the 4-hour was looking, and actually our anticipation for price to come back at the 50% mark. As you can see, this 50% mark, I still trust that the market is, no, I don't think so, because there's this fair value gap right here. This candle from this opening to this area, that fair value gap, whereby price came and retraced. And I think this is 2 p.m., which was almost of New York session. Yeah, you could take buys, but I was contexted by my sell, which I took, which was a 5.6 RR, which is 5.6% on my funded account, and made me pass my FTMO account. As you can see, that's the trade we took. So we entered on the fair value gap, and price started ripping, and we named these areas rape areas. So price, if starts reacting and comes back and reverses, and this was our final zone, because this was also an order block. We had this order block right here, and we could think that price could react, so we could move our stops to break even at this area. That's our break even area. So let me just name it break even. Yep, we could move. We were waiting to move our stops to break even, but in this trade, it was fast. NASDAQ 100 moves fast. It moves fast, and it will go with your strategy if you're right. If you're wrong, it won't go with your strategy. So our trade actually went to our take profit, and yeah, that's the trade we took. Let me confirm it again on our FTMO Nani dashboard. As you can see, we didn't break any rule. Two minimum trading days, max loss was 10k. So this is the loss which you make and you actually blow your account. And this was the max loss. No, this was the max daily loss. Like a max daily loss is the loss that you're not supposed to make in a day. So max daily loss is 10k, which is 5% of 200k. And the actual max loss, the loss that you are not supposed to make to blow the account, is 10% of 200k. And the profit target for phase 1 was $10,000, which we actually passed it, which is, this is 5%, but like the actual passing percentage to pass the accounts is 10%, which we actually performed with a 10.22%. Yeah guys, that was a really good time. So guys, let me tell you something. I didn't actually used to trade like this. I didn't used to get this type of performance since basically I'm gonna start making videos about talking about how my trading journey started and how I prepare myself day to day trading. And yeah, so back on June this year 2024, that's when I started getting some motion. I started being profitable. Basically I started less blowing accounts. So there's a period whereby I was blowing even demo accounts. So when I turned 18, that's when I deposited money and I actually lost money. I actually got the beginner's luck and actually made money. So let me just not talk about this journey of mine, because I will yap a lot on this video, and I know you guys attention spans are cooked. You watch too much TikTok and Instagram, cannot watch these videos. So I'll start making separate videos against trade recaps, whereby I just talk about my trading journey and actually motivate you guys to actually pursue this journey. Or you can pursue any journey, but like it's not a must. It's like a really hard journey, and me becoming this disciplined to perform this kind of results, it didn't take one day. It actually took me 3 years to get this kind of results on a demo account, which is on a demo account, which is just the same way as a real account. There is no difference. Maybe the emotions whereby you actually in a real account, and if you actually pass the account, you're starting to make money. So there's that kind of emotions whereby you will start to trade more to pass the account and to make money, but there is no, the market condition are the same, the way you execute are the same, everything is the same. It's just on the mind how you treat them both. And that's how I'm trying to desensitize myself to the point whereby when I start trading real accounts, real funded accounts which are real, I just treat them as demo accounts. I have my target for the month and that's done. So I think we're done. So I think that's it, guys. I hope you guys have a beautiful day, and yeah, that's your boy Lyimotradez, and we're out.